some of the picks that we've sent out, and what I wanted to do was talk about how to use the stop losses. And give me 1 second here. The problem that I'm going to have right now is that I cannot see what people are typing in the chat room. So the first one that's been a bit of an annoyance for me is this stock right here. And what I'm looking at when I'm looking at this stock right here is there should be a possibility of a move at least up to this moving average around the 341 level. And the reason I find that is I'm just drawing a line over here, and I can see it's previously gone up to that level. So I'm hoping, we can get a move up to that level at least. And, unfortunately, we haven't been able to, achieve that goal just yet. And the reality of the situation that we have is that not every single time, we're in a stock and, we're looking for this or that, we're going to expect the results to be in our favor. What we can do in order to help ourselves is, minimize our losses as much as possible. And, if we're looking to improve our trading, then it shouldn't be such a huge task to say, hey, listen, let me control my losses and let me see if I can help myself, improve on a day-to-day basis. Now, when this stock doesn't work for you, it just doesn't work. And how you kind of have to deal with these, stop losses is you can go into a smaller time frame. For example, let's just say we get into this one here. The buy price for this stock was $3, right? And we basically were looking to get into this area here. What you want to do is you want to say, okay, if the stock doesn't hit my target, should I wait until it hits my stop loss? I don't think that's a really good idea, especially for the type of stocks that we trade. For the type of stocks that we trade, everything moves really fast, and you can get yourself into a lot of trouble. So what you want to do is, look to see if, there's enough room between your buy price and, where the current price is. And for me, especially, 2 to 3% is enough for me to say, okay, you know what? I think it's time for me to, move my stop loss to my buy price. Now, our target on this one was like 316. Some people, if they were wise enough, they would say, hey, listen, you know what? It hasn't moved up about 3% here yet. So what I can do is I can leave my stop loss where it is. And if it moves up to maybe like 308, maybe 310, at that level, it might not be a bad idea to move my stop loss to a higher level, which should be our buy price. So especially if it gets into the 308, 310, 312 area, and it touches those areas a few times, we should really take advantage of moving our stop loss to $3. Now, the reason we're saying $3 is because that was our buy price. And if we do that every single time, what will happen is you'll realize that if the stock is going to run, it's not going to come back to your buy price and kick you out 9 out of 10 times. If anything, 1 out of 10 times, it'll actually come down to your stop loss and kick you out and then go higher, which is not a big deal because you can easily get back in. Now, on this stock, I lost $40, right? Or $20, sorry. I lost $5 when I bought it, $5 when I sold it. I bought it again in one of these areas here, and I basically got stopped out down here again, which is fine, which is not a big deal. It's a part of trading, and you just have to deal with that. Now, the biggest problem that we have when it comes to, especially overnight holds versus day trades is the stock market itself. And if the stock market is doing well, everybody's, thinking positive, they're happy, they want to increase their position instead of decreasing their position. They want to hold longer versus wanting to get out for a smaller profit. So in these type of situations, what people are looking for is, opportunities where they can quickly just, get in and, take a quick profit and get out. They don't want to hold overnight. That's one of the reasons why our swing trades have not been doing as well as they were in October. And the reality of this is we were in a much. These are the things and the situations that make a big difference, and we just have to. We do have to adapt, and the way I'm adapting to it is I'm moving my stop loss to my buy price at the first opportunity that I get it, and that's basically a move of 2 to 3% above my buy price. And the quicker we do that, the less trouble we're gonna have, and the easier life is gonna become. Now we got a situation with EVLV. This was the alert yesterday. Yes, it hurts. Of course it hurts. It goes down, and again, if we had followed the same rules, what would have happened is we would have bought back here at 55. We would have held it as it didn't hit our stop loss, which was 51 again, and we would have been able to take advantage of this profit over here. Obviously, it didn't work that way for a lot of people because people are busy at work and they don't have that sort of time. Some people didn't have multiple trades for the day. But again, this is not a bad profit. I mean, you make a decent profit on the day. You're probably not going to be able to make the whole 15.63%, even if you can make that 6% that we normally look for, or even 10% on this trade, which is a pretty decent return. At least what it does is it helps you recover the stop loss that you had down here. So these are the real things that I've been looking for, and hopefully, we can all learn from it and just move forward. If we are not looking to change the way we trade, we're going to get the same results that we've always gotten. And the reality of that is in our portfolio. And the only way we can fix it is if we fix ourselves. And this is basically where everything starts. It's a very simple concept. And once you can start, perfecting that and making that better, what happens is you can focus on other things. You can focus on, technical analysis and fundamental analysis, reading the news and everything like that. This is the first thing that we have to fix. We have to fix this. We have to get to a point where we're so serious about trading and we're so serious about protecting our capital that, it doesn't matter what happens to the stock after the fact. The reality is, at this moment, the stock is not working in my favor, and I'm not going to continue to hold this stock and basically lose everything that I've got. So we got to work on this, and hopefully, it can help us in the long run. And then there are stocks like BIOC. We alerted this stock. I think we were supposed to get in somewhere here, and we weren't able to get into it, or I think we didn't get in. We made a profit. We got out, and it only went up to the first target on this day here. Obviously, the goal was to get up to that level like it did eventually, which was that line because of that resistance line. It eventually got up to there, but it just fell a lot more. And there's no need to take chances like that where you continue to hold. And the worst thing you can do as a trader, the worst thing you can do as a trader is add to a losing position to bring down your average price. I've been trading for a long time. I've done that in the past. I did it once, and the stock that I did it on was a company that I did all of my fundamental research on, and I read up on their, drugs and everything, and I thought, this company was going to be worth $20 from $2, maybe in a year, maybe 2 years. I did everything, and this is 2014 I'm talking about, and it didn't work that way because that's not how stock trading works. There's probably one out of every 20, pharmaceutical stocks that will actually do what you think is going to do. So one thing is, one out of every, I would say, 100 stocks will go from, $2. One out of every 100 pharmaceutical stocks or biotech stocks, they'll go from $1 to $20, one out of 100. So you already have a very small chance of that happening. And then on top of that, out of the stocks that you do research on, maybe one out of every 20 will actually go from, $1 or $2 all the way up to $20 or $30, whatever the case might be. And a lot of the times it's news that you don't even know exists. So what will happen is a company is already in the works, working on some sort of a drug, and this is a really good example. And the stock will move. When was the last time you saw this happen, where a stock goes from 280, to $23? Even if you say $20, on real news, like a real stock actually doing that. Yes, we see stocks going up 500%, 800%, 1,000%, at least once or twice, every quarter. But that's like a move over the span of 1 or 2 days. But this was an actual move where people were consolidating shares, were buying shares through this channel for a very long time, and when this news finally came out, they were able to make a lot of profit. This will happen maybe once every 2 years, maybe 3 years, and the main focus is right here, the biotechnology. So biotech, biotechnology, pharmaceutical, all of this stuff is all the same stuff. So the main focus is to fix our stop loss issues. And what kills me the most in regards to uh, when people ask me questions is when there's a stock that you know was at $1.50 and the alert was to sell it at $1.65, and the example I would say is this one right here, NBY, and we got in at $1.50, goes up to $1.55. You're supposed to sell at 163, and the stock is all the way down at 125, 128, 130, and people are like, is it still a hold? Then what was the whole purpose of putting in the stop loss into the text message in the first place? So it really hurts because what it does is it makes you feel like people are just looking for the good stuff. They don't want the good and the bad. That's not how stock trading works. Even life doesn't work that way. When you buy a house, you have to deal with the mortgage, the bills, the property tax, the maintenance of the house, all of that stuff you have to deal with. Yes, you're getting something that's really good, but you got to deal with the bad stuff as well. When you get a nice job, when you get a job that pays you a lot more, it's good. It's amazing that you're getting a job that pays you more, but usually comes with a lot more responsibility. If you want to go on a diet and you want to lose some weight, again, it's the same situation. You got to sacrifice a lot of stuff to get to that level. So why would stock trading be any different? It's the same thing. You have to give up a lot to get a lot. And in life, where you have to give up a little, you can only expect a little in return. So let's fix this. Let's make this a reality. And when you start to do this, what happens is you gain a lot of confidence. You're able to trade in a lot of, in a lot open manner. You're able yourself to take a lot more size on a particular stock versus not doing that, because you know that even if the stock was to fall down below your stop price, you were going to get out and not take any chances. So if you ever want to take a lot of position, you have to start using stop losses, and you got to stick to them. You got to forget about it. You just got to say, what's done is done. What's next? And look at the people here. I mean, let's just say for any reason, even in this spot here, it's not really a position where I would buy this stock because it's very high up, and it's like $22. But if I didn't use a stop loss here, and I'm still holding the stock, it's only going to get worse. It doesn't get any better. The stock's probably going to go sideways. There's a chance that it might come up to $10 in the next few months, but it's only going to get worse. And at one point or another, this is going to be an account which started from $25,000, $30,000, and it probably started from this stock being a day trade, which was in this area. And you start thinking the stock is going to go to $30, $40, $50, and that dream is done, and now you're basically looking to see how you can add more funds to your account to bring it back up to a position where you can day trade. Why get into that position in the first place? It's not the right way to trade. It's not. I mean, these are just recommendations. They're not demands or orders where you have to do that. But only somebody that has a lot of passion for other people's well-being, you can say, will talk this way. And I just hope nothing that I've said has come off the wrong way. And these are the things that really matter. And I feel bad for the people that bought in these areas. It's horrible. It sucks, but that's trading stocks. So that's pretty much it. Um, that's all I got right now. I would like to move it over to AC and see what he can add. I'm sure he's got a lot of stuff. I don't come off, with a lot of this, slides, the slides and stuff like that. I like to go into more realistic stuff, what's happening right in front of me right now. I'm not as organized as AC is, so to say, and I just love watching what he has to offer. So I'm going to let him take over the screen here, and hopefully he can share some extra knowledge with us.
Can you guys see the screen share? Just you can type yes or no. Awesome. All right. So today I'll have a little bit of a talk about risk management and a trading ledger. I usually, not always, but usually emphasize and I try to tell people that if you don't if you don't control yourself and if you don't check and analyze your trades, you'll never be successful. Okay. So what I did, I'll talk about trading ledger first, and then we'll go to risk management. In a trading ledger, if you guys want, I have created the Excel spreadsheet that you guys can type in trades and a goal. So depending on what your goal, daily goal is, when I started in 2013, my daily goal was $50, just $50 a day, consistent. If I averaged out on the $50, I was super happy. Then you have to increase your goals. So if you made $50 a day the previous month, if you were able to achieve it, the next increment for you is to maybe raise it by $25. So $75 will be your next month goal. If you achieve it, you raise it, because you never want to be in a position where you don't challenge yourself. Okay, so let's say if I go to $150 a day, right? I go $150 a day, it gives me the average of $600 a week and a monthly goal of $2,400. $150 a day is not too much, but like I said, it requires a lot of discipline. Even though that number may not be for some people such a big number, but it all adds up, especially for the people who have full-time positions, and $2,400 is part-time income. It's not bad at all. So basically what it does, if I want to put like let's say 1213 ticker AAA, for example, and you go like E-Trade, entry price $1.89, exit is $2.76. Shares count, we're gonna get let's say 1,000 shares. Okay, commission is let's say $6. So now everything is being populated, all the cells are being populated. So if this was a losing position, if I exited if I got stopped out and exited at let's say like 167, this would be automatically populated as a red cell. The reason why I do it is so I can see what I do. I can go at the end of the week, if I go and take a look at the whole week, I can analyze the bad trades. If you don't analyze the bad trades, the red ones, you'll never succeed, because you have to learn what you did wrong. Okay? There is no like, okay, I'll try next time, I'm not going to even look at it. You have to look at it. This is bad, you made a mistake, and you have to correct it. Okay, so now you go like a week 1, 2, 3, and 4, and on the left-hand side, on the top corner of the screen, everything is being populated. So if you guys want to send me an email, at the end of the slide, you'll have my email address, and just send me an email that you want a copy. I'll send you the copy, and please control yourself, and that way you can challenge yourself, you can see how you do, and there will be no lying, and you can see, okay, this was a day, and I did very poorly. I lost $300, and the human nature is that a lot of people do like a revenge trading. Okay, I tell my students, don't do revenge trading because you're going to lose. Don't double dip. People who revenge trade, their emotions are taking over their skills. Even if you have a great skills, if you are not controlling your emotions because you are mad that you made a mistake and you lost money in a trade, you'll never make the money on the same trade. I can guarantee you. I've been there, I lost, and I did revenge trading. I have never been successful. Never. Because I wanted to show that particular stock that I'm going to make money on it. Okay, so I have that copy. So if you guys want, I can send it to you. Three sections I wanted to discuss. That would be the initial stop loss and your risk tolerance. So initial stop loss has to be placed just immediately if you enter the position, because initial stop loss is your original thought process that has to remain intact. Okay, so you entering the trade, you have to are risky on a trade. Okay, there is no other way around. You can't be like, okay, I'll enter, I'll see how it goes. No, you are like, okay, this is my portfolio, let's say $10,000, and you are like, okay, I can lose $150 on a trade, and I know what my stop loss is going to be. I can guarantee you, if you have a good entry and your stop loss is 3-4%, you'll never be shaken out. Okay, so initial stop loss has to be placed immediately, and then you shift your stop accordingly. Okay, first stage is the break-even stop, as the first step toward the implementing a superior exit plan. So you enter the trade, you put your initial stop loss, the trade is going your way, you are able to get your target one, move your stop to break even. Okay, if you have the momentum, that stock should never pull back that much. Okay, so from being minus 4% stop loss, initial stop loss position, or whatever your risk tolerance is, then you move your stop accordingly. Okay, and this, remember, the goal is to catch the free ride, like a free train, and just ride it up and maximize, minimize the loss of your initial exposure. Okay, so, and then again, at step number 2, your mind is going to be thinking differently. Your mind will be all relaxed, you'll be all like laid back, and you can just eat your sandwich or whatever you want to do, and just kick back and relax. That's how you do it. The trading is easy. You just have to find that spot where you feel great. Okay? And your first spot that you're going to feel great is your initial stop loss, and then moving your stop loss to break even, and just watching it just right, and shifting that stop accordingly. If you have no option of doing the trailing stop, because trailing stops are difficult. I mean, not difficult, but it can be tricky for people in trading experience. So stage number 2, you're laid back, relaxed, break even stop. Stage number 3, profit taking. Your mind will be even like, you'll be ecstatic because you're already making money. Your stop loss is in a position where you are, if you get stopped out, then you're already in a position where you are going to make money on the last batch, because your stop loss is way, way ahead of your initial stop loss, ahead of your break-even stop loss. Okay, so 3 stages. First one is your you shouldn't be afraid, because you have your risk base and initial risk tolerance. You know that I can afford to lose 4%. Stage number 2, you feel better. Stage number 3, you feel awesome, right? Okay, so we all have to go to stage number 3, and we're going to help you guys. We're here for you. We're going to help you get there. It's all easy, believe me. So I'm going to discuss a few things that I have alerted myself in the room. Like I said, not that I try to be selfish and talk about my own alerts, but it's easier to talk about stuff that I do because, like I said before, we all have different strategies and we all respect each other, right? So obviously I'm not going to talk about just great trades and how great we are. We're going to be talking about stop losses that were hit, and the alert didn't work the way I wanted. So let's dissect the alert number 1 that I did. Actually, it was on November 15. So let me just delete that. It must have been from the previous session. Okay. So BIOC. I alerted that above 124, the stock was moving that day, the decent volume. I alerted that above 124 for 129 scalp, and then 132, 140, and 148. Okay, and then we got 1 minute later. I realized obviously I made a mistake, so I changed the symbol 112. I was kind of already impatient because I want to make money. My entry should be you in and out. It should work like this. Based on the level 2 and stuff like that, and all the indicators and backtesting I did prior to alerting the trade. So 112, I said was supposed to deliver in 5 seconds. Current stop 117. I got a little bit impatient. Then 122, I was like, okay, BIOC, my stop is 120, but I was manual. I'm impatient here. 123. I'm still here. We'll sell on 120 ask only. So I'm trying to guide you through step by step, right? And then at 128, 129, so little volume at 126. My stop will be manual at 123. So I'll be at stage kind of 2, where my stop loss will be break even, right? I'll feel a little better. Right now I'm feeling okay. I know what I risk. Stage 2 would come at 125 if it worked. 131, I said I have to go. I ate my sandwich, so it was like lunchtime. I ate my sandwich. I was like, I gotta move on. I don't want to look at the screen. So I set up the bracket order with 1.95 stop loss and targets as stated before. Let's take a look at what happened. So we're gonna go and take a look at what happened. BIOC, I alerted here on that arrow here on the break of this horizontal line at 124. Okay, so it beautifully popped right over here, and it actually failed. That's why I was getting impatient. It failed to deliver the first target, which was 128, right? So I was like, okay, it's not gonna go. So I started to manipulating my stop losses and stuff like that. And I was like, okay, I gotta go. 119.5 stop loss. Stop loss was hit. So let's measure the risk tolerance. It was 3.5% ish or something. Let's see. So from entry 124, we got stopped over here. 4% stop loss. But let's take a look at it. What happened? If I was back holding, if I was not wise, if I was not responsible enough, and let's say, for example, I didn't have a day trades, I would be hoping that I can maybe unload it next day because I was so impatient and whatever I would have been. I would have, if I didn't get stop out on the easy, nice, peaceful already, before I entered the trade, I already knew how much I was going to risk. I would have, if I was holding that stock, I would have lost, just take a look at it, 40%. Would it make me a good trader? No, I would be embarrassed. If I told someone that I entered the day trade and I lost 40%, I would be like, are you okay? I mean, maybe you should, change the profession, So you don't want to be like this. You don't want to hold the bag. You are a trader. It doesn't matter what the company does. It doesn't matter if the company is going to go bankrupt in 2 hours. As long as you're going to make your profit in 5 minutes. We don't care what the company does. The company probably doesn't even make a draw. They have the clinical studies that they will never work. If that was a potential on that company, believe me, that stock would have been trading at $20 an hour. And I know the companies that like Bluebird Bio, $200 stock. They don't have a working product yet. It's all clinical stages. So this company is, it's probably not a good company. They did a reverse splits, and so that's what it is. It's not a good company. So we trade it, flip it, forget about it. No emotions, no greed, no fear, nothing. Like you would be like a robot, right? Okay, beautiful. So let's take a look at the alert number 2, 8% profit, NXTD. Obviously, I made a mistake again on a ticker. Sometimes when you multitask, you might want to just make a mistake and I just try to correct it right away. So a minute later, I realized I made a mistake. So above 78 for 81, 83, and 87. And I said riskier because FOMC meeting about the Fed rates. The market would, could be shaky, and it was, right? The market reacted in the Federal Reserve decision, it was kind of up and down swings and stuff. So that's why I kind of emphasized this is what it is. And this is how we have to take it, minute by minute and hour by hour, right? Market is changing constantly. NXD target 1 and target 2 hit, right? So let's take a look at it, how it went. NXTD, entry per alert over here. So we perfectly hit the exit per alert here, and a stop loss 4 to 5%. And the reason sometimes why you have to trade, you have to kind of see the pattern. If you see on a 3 or 5 minute chart the pattern of the stock that goes up very nicely and it kind of follows those reference lines, right? So my stop can be, on this particular stock, can be 20-day SMA on a 3 or 5 minute chart. In this case, it would be 3-minute chart on a blue line. I'm going to keep that as my stop loss. Initial stop loss, obviously, I'm going to have it hard like 5%. So I'm going to enter, expose myself to the trade with maximum exposure of 4% or 5% loss, depending on how I feel that day and how big the position is. And in this case, the stock delivered per plan. Target 1, target 2 perfectly hit, and the stop loss was 4 to 5% on the blue line. So that blue line was hit over here, and actually it went further. So this perfectly trailed that blue line from the initial move here. And basically, if someone entered here, just writing the 3-minute chart, very simple and very, let's see, like even over here, let's say start here, and let's measure. So this is all no hammer candles, no nothing, no full body below the 20. So we can probably go over here. I'm just writing that simple sequence, right? So 5-minute chart would have been probably much clearer because 3 minutes has got a little bit more noise than 5 minutes, but 5 minutes, I think it will be nice and clean. Yes, it is. So it's nice and kind of clean. So blue line would be our line of reference, and you can see a little bit of a congestion here. But that congestion, it's created like a little bit of a box. That stock was kind of consolidating on another leg up. So if I go and beautifully draw the rectangle here, over here, I can kind of see a little bit of a box that stock kind of wants to go a little further. So now I can see like a slight uptick in volume here, over here, right? And basically consolidating on no volume at all, uptick in volume and pop, right? So remember, volume precedes the price. So you have an uptick in volume, and then kind of pop here. So that gave you a little bit of a sequence of how we want to trade it. So that's basically how it works. And that's all I have for today. It wasn't much, but it's it's not the point to give you the whole session about how to trade. We have to take it day by day and minute by minute, so we can dissect the whole kind of situation how we trade, and hopefully it can get stuck in your head that we need to follow the rules. If you don't follow the rules, you'll never ever make money. Okay, so that's all I have, guys, and thank you very much, and I hope you enjoyed.